MiRus raises $1.5 billion from Boston Scientific. Boston Scientific gains not just equity but a direct line into next-generation implant materials that could reshape its spinal surgery margins. The acquisition option creates a timeline the board will likely accelerate once regulatory clearance is clear. Expect the option to trigger by early 2026, integrating MiRus's orthopedic tech into Boston's core portfolio and cutting two smaller competitors out of hospital RFPs. Rivals must now decide whether to license similar alloys or cede share in the $4 billion spinal segment. Wix cuts 1,000 jobs or 20% workforce. Engineering headcount drops first, which directly slows the rollout of Wix's new enterprise CMS features. Product timelines that once targeted Q2 now slip into late 2025. This forces Squarespace to either match the cost structure or watch its own mid-market share erode as Wix stabilizes pricing. Smaller agencies relying on Wix templates face higher support tickets until the remaining teams adjust. The real test comes when enterprise renewals hit next year and feature gaps become visible to CFOs. Groupon slashes 400 jobs globally. Merchant support teams shrink most, raising the chance that deal quality slips before the savings hit the P&L. The $25 million target assumes no revenue leakage from unhappy partners. Local businesses will shift more volume to direct email campaigns, bypassing Groupon's platform entirely within the next 2 quarters. Yelp and similar directories gain an opening to bundle promotions without sharing margins. Watch the churn numbers in the next earnings call to see whether the restructuring actually sticks. Balance Ophthalmics wins FDA clearance. Home monitoring for glaucoma pressure now moves from clinic to bedroom, but specialists lack protocols to act on the overnight data. Integration with existing records becomes the next bottleneck. EHR vendors like Epic must now build IOP data ingestion or watch ophthalmology practices adopt point solutions that bypass the main record. Smaller device makers gain a window to pair their sensors with the FSYX platform before standards lock in. Laser Photonics lands J&J drilling order. The order signals Johnson & Johnson's push to bring more laser processes in-house rather than relying on contract manufacturers. Precision drilling tolerances that once required outsourcing now move inside. Other medtech firms will face pressure to place similar orders within 12 months or accept slower iteration cycles on new implants. Suppliers without comparable systems lose bids on high-volume runs. The shift could lift margins on future medical orders if volume scales as expected over the next year. ILA Capital launches $50 million buyout fund. Most acquisition funds chase top-line growth to satisfy outside LPs. ILA skips that script because its software holdings already generate the capital. The absence of outside capital also removes pressure for quick flips. Profitable Amazon and Shopify operators can therefore negotiate deals without the usual 3-year exit clock. Smaller marketplaces lose merchants once ILA consolidates checkout tools by early next year. Existing aggregators must raise bids or chase unprofitable inventory. Sellers gain cash flow leverage not seen since 2021. RB Robotics reports Q1 2026 results. May 28 will show whether radar production volumes are tracking the auto OEM schedules promised last fall. A miss hands LiDAR vendors an opening to capture design wins before the next model year. Component partners should prepare for tighter payment terms if margins come in below 40%. The call also surfaces how many units have actually shipped into commercial fleets versus prototypes. Investors tracking the space will pass unit guidance against earlier statements from Mercedes and other partners. Intuit trims 3,000 jobs or 17% staff. 3,000 roles disappearing means the tax automation push just accelerated by 2 quarters. Rivals now face a larger installed base they must undercut before filing season. Smaller bookkeeping platforms lose their integration partnerships once Intuit folds those workflows in-house. The reorg also signals TurboTax will expand into payroll services already served by competitors like Gusto. Accountants lose project work as more filings move to fully automated flows. Watch retention at competing tax apps drop once the new automation reaches consumers. LinkedIn plans 5% headcount cuts. LinkedIn is pruning teams that sell to small businesses so capital can move to enterprise growth. Salesforce must defend its recruiting integrations or risk losing platform data flow. Smaller HR software vendors gain a short window to court the mid-market accounts LinkedIn deprioritizes. The cuts also reduce headcount available for new feature development in the jobs marketplace. Recruiters see fewer product updates until the reorg settles. Enterprise customers gain from the focus shift but lose some community features. Cloudflare cuts 20% global workforce. 1 in 5 roles vanishing hands pricing leverage back to legacy CDN providers. Akamai can now test rate increases on enterprise contracts without immediate fear of displacement. Developers relying on Workers and R2 should lock in current terms before any cost recovery hits usage-based billing. The reduction also slows rollout of new edge locations outside major metros. Watch enterprise renewal negotiations stretch longer as procurement teams gain the upper hand. Smaller competitors pick up the accounts that Cloudflare de-emphasizes during the transition. Coinbase reduces staff by 14%. The exchange's engineering bandwidth just dropped below the level needed to ship its next compliance suite on schedule. Mid-level product managers are now triaging which roadmap items survive the quarter. That forces a delay in the institutional staking product, giving Kraken a clear runway to lock in custody deals through the end of next year. Watch the API uptime metrics next earnings call. They often slip first when support staff vanish. Customers notice slower, high-volume query responses within 6 months. Standard Chartered to cut 8,000 roles. Support teams handling trade reconciliation lose critical institutional knowledge first. That hands a larger slice of back-office volume to outsourcing partners in India within 18 months. Existing vendors like TCS see their contracts expand faster than new logos can offset the loss. Margin pressure on the bank's own technology spend rises as severance costs hit this quarter's numbers. The cuts also thin the bench of Asia regulatory specialists that rival banks have been trying to hire away for 2 years. IKEA slashes 850 jobs. Franchisees now absorb more of the supply chain coordination that headquarters just destaffed. That raises the odds of inconsistent store layouts rolling out across Europe by next spring. Smaller rivals in flat-pack furniture gain shelf space in procurement negotiations they previously lost to IKEA's central buying power. Inventory turns at franchise locations will diverge from company-owned ones within 2 quarters. The remaining global design group must now prove it can maintain quality without the regional specialists who left. Innovaca lays off 850 staff. Enterprise health systems that signed last year now face longer implementation timelines with fewer dedicated engineers. That opens the door for Epic to upsell its own analytics modules before Innovaca can deliver promised integrations. The pivot to payer-focused products loses its data science bench at the exact moment Medicare Advantage deadlines approach. Contract renewal rates will drop once CIOs experience the reduced support levels. Procurement officers cite these cuts during every renewal discussion this quarter. June cuts 25% of staff. Data labeling for on-chain queries loses its largest team overnight. That slows new dataset releases and pushes analysts toward paid alternatives from Nansen or Arkham. The 25% reduction hits the open-source contributors who maintained the public dashboards that drove adoption. Enterprise customers demanding SLAs will now demand price concessions to stay. Smaller analytics startups gain a window to fork the open datasets before Dune can restaff the curation role. Query volume on competing platforms will rise measurably by Q4. Siemens eyes 5,000 automation job cuts. These reductions hit the division responsible for keeping production lines running at other companies. Remaining teams will face longer project queues, pushing some clients toward faster integrators. ABB gains an opening to steal mid-sized factory deals. By next year, the revenue gap in industrial software services widens. Siemens must decide whether to raise prices or accept thinner margins to retain contracts. Missed bids will surface first in the automotive segment. Dropbox cuts another 528 jobs. Repeated cuts have already thinned support layers. The latest round will force remaining account teams to cover more ground, raising the odds of missed renewal targets in coming quarters. Enterprise buyers should prepare for stiffer price negotiations as the company protects cash flow. Smaller competitors now have a clearer window to migrate dissatisfied users before the next quarter closes. Several large customers will test alternatives by summer. The pressure on renewals is only beginning. Nokia plans 2,000 job reductions. Network operators start accelerating vendor diversification talks the moment these engineers leave. Nokia's remaining 5G rollout support thins out quickly, giving Ericsson and Samsung extra leverage during upcoming contract renewals over the next 2 quarters. European carriers in particular may reallocate portions of their budgets to avoid single supplier risk. Watch the tender responses that come in after the cuts take effect. Budget shifts will appear in the next wave of RFPs issued by operators. ByteDance trims 500 roles. The 500 roles represent a small fraction of headcount, yet they sit in teams that handle creator payment flows. Payment processors and ad partners will see slower response times on disputes and reporting. That opens space for regional platforms to court the same creators with faster settlement terms. Expect volume migration to start within 6 months on the creator side. The change stays invisible to users until payout delays pile up. Cognizant prepares 4,000 job cuts. IT services clients will see project handoffs slow as Cognizant trims its bench of consultants. Competitors such as Infosys and Wipro gain a direct path to pitch continuity guarantees in active RFPs. Those firms can now staff the same work with less ramp-up time and lock in multi-year deals. The restructuring therefore hands market share to Indian rivals before the fiscal year ends. Watch for that pattern in earnings calls from all 3 companies.